cheap it so you can know something. But it's very cheap. So we have 7 lessons there. We show you what is the stock market, when to buy, when to sell. We show you all those technical analyses. So all those indicators, MACD, all those things, the Bollinger Band, we call that Bollinger Band. When we show you when the stock market is overbought, it's oversold. So whenever the stock market is overbought, you have to know when it's overbought. That means when it's overbought, it's time for you just to sell. Where the stock market gonna go down, when it's oversold, it's time for you to get in. So if people don't know when to get in the stock market, they don't know when to trade. We show you all the resistance, resistance, support, how to trade it, trade in 1 minute, 2, 3, 4, 5 minutes. Like we show you all those patterns, candles, where you can put your trade for 1 week, for 2 weeks, for 1 month. All those things have been teaching in this class. You're gonna see it we will give you some theory and some practice. It's 7 lessons for cheap. So, and what is good about this class, you're gonna get it forever. It's not something that you just need to be in class. It's something that you can have anytime. You watch it anytime because you have it forever for that little amount. So you have it forever and you sign in whenever you want. And then you can go back to it, review everything. Just go there, click on it, do me that favor. And also, I always bring some good stuff free. Just subscribe to that channel and you will get everything. Every time I'm go live, I just post a video, you'll be notified. I'm just gonna give you some review, something about MACD. But we're gonna have that, you have that in this class also. Just click on the link, it's gonna take you to the class. So we have what you call MACD. I'm just gonna give you some brief summary about it, but most thing has been offered in the class. So what is a MACD? A MACD is 2 lines because MACD is very powerful. It helps you when to buy and when to sell. It's good for short term and it's good also for long term. Remember, you have what you call short term and long term. So the short term is when you trade, or you can buy and sell for after 1 month, 2 months, 3 months, and 6 months. Remember, before 12 months is a short term, or trade. And after 12 or 1 year is like you invest your money. So we have the difference between trade and investment. So when you invest your money, it just is very different when you trade. In order for you to invest your money, you have to know what you're buying. You have to buy great company, strong company. So in those classes, I offer you this. I will show you the PE ratio. So when to buy, you have to know the PE ratio. You have to know the intrinsic value. You don't just buy stock like that. You have to know when to buy because we are what you call the intrinsic value of the stock. So when to buy, we show that we teach you all those in the class. Now, MACD, let's just talk briefly. It's going to be like between 5-10 minutes. So the MACD is 2 lines. So whenever these 2 lines, one of them cross, that's the time you put your plan. You just buy or you sell. As you can see here, when the MACD line crosses from below to above the signal line, the indicator is considered bullish. Remember, we have what you call bullish and we have what you call bearish in the stock market. So bullish means when the stock market is going very high, going bullish, going green, or it's time for you to buy. It's bearish means it's going down. So in other words, bullish means going up and bearish means going down. Now, so these two lines, whenever one of them is crossed, that's a time for you to do what you have to do. Either you buy or you sell. So as you can see there, it says the further below the zero line, the stronger the signal. When the MACD line crosses from above to below the signal line, the indicators is considered bearish. So the further above the zero line, the stronger the signal. As you can see here, this is what you call MACD. As I told you, MACD is like two lines. You see, two lines. We have what you call bearish crossover, and we have what we call MACD or bearish crossover. So whenever, let's go down there here. So you can see better, we have that what's called MACD line. We have what you call signal line. So you see here, we have what you call the trend. The trend or the stock just going down here. See, it's going down. See, stock here. The trend, we call that, it is a trend. A trend going very down here. See, it's going down. See, it's going down. So those are the two lines that we've been talking about. See, we have this red line and we have this blue line. We have MACD line. Remember, it's two lines. One called MACD line and the other line is signal line. So the MACD line is the bullish. We call that bullish line. So we see this MACD line. Let me call it bullish line. It's a bullish line. That means the stock is going up. So whenever you're talking about the MACD line, that means bullish. It's going up. So the signal line here, that's a bearish line. We call it. We're just going to consider it as a bearish line. You see, the red line. That's the bearish line. See? So this bullish, we call MACD line, is the bullish line, and the signal line, which is the bearish line. So remember, as I've been told you, those are two lines. Whenever one of them cross over, that's time for you to buy. So the bullish line means time for you to sell. See, stock. Whenever the bullish line, it's time for you to buy. So now, as you can see here, remember I told you, the trend is going down. See here, it's going down. Trend has been going down. You see, the stock is going down. That means the signal line, which is the red line, cross over the blue line. See? You see the red line? So at the top of is above the blue line. So that means the stock is going down. Meaning, if you have bought, as soon as you see the red line here, let me raise it so you can see. As soon as you see the red line back here, cross over the blue line here. As soon as you see it's been crossed over the blue line, it's time for you to sell. See, the stock was up here, for instance, it was up, and then you sell before it goes down. You sell here. You sell here because if you don't sell, what's going to happen? You're going to lose the money because the stock is going down, because the signal line, which is, we call that signal line, which is the bearish line. So the signal line is crossed over the MACD, which is the blue line. So as soon as you see the MACD line cross over, if you, for instance, if you've been in this trend, you have bought, and then as soon as you see the signal line cross over, you just exit, you sell, boom. Because after, you see what happened? After you sold, after you have been sold here in the stock market, the MACD cross over and they start going down, all the way down here. See, the new ways I'm going to show you now. So meaning that's mean what's time for you to sell. See? Because the MACD line, the signal line, which is the red line crossover. As you see, it's crossover, it's going down, you see, all the red line here, and you see the stock is going down. Because it starts from here. If I put the smart, you see, it starts crossing here, see? And it starts going down. And then you just remove yourself, you sell here. Now, the MACD line, which is the blue line, we call that bullish line, which is the bullish line, MACD line, bullish line. From here, after a certain period of going down, now the blue line is crossing over the red line, meaning it's crossing over the signal line here. See, cross over here. So what happened? They start getting up here, you see? Stop, because it's getting green here. See, all this here. Going, start going. So that's mean the stocks is going bullish. See all the green, because it go down here and now it's going up. See, the blue line. As soon as the blue line stay above, you see. As soon as the blue line stay above, you stay in the trend. You don't exit, because the blue line, which is the MACD line, is still above, still at the top here. Keep it here. You keep it until you see it's crossover. See here, it's a little bit cross. Now, the red line here, which is the bearish signal line, it cross here. You're gonna see the stock, it will be good down here. See? So it's two lines. So whenever, again, because if you need to know more, just take the class, because we got more good stuff in the class. So I like to help, that's why I've been helping you. So as soon as you see the MACD line, the MACD line is very important. It's very powerful in your chart. So it's help you a lot, especially when you go for long term, short term. We show you also in the class the 50 moving average, the 150 moving average, the 200 moving average, so we can combine them. So whenever the 50 is above the 150 and the 150 is above 200, we have a strong bullish. We have the midterm, or we call that short term. Whenever the 20, we have what's called 20 EMA, 40 EMA. I teach you that in the class. We're gonna see that if you take the class. 20 means for short term. Whenever the 20 or above the 40 EMA is for short term. We use the 20 and 40 for short term, for trade. Whenever the 20 above the 40, you can do trade. But the 150, the 50, 150, and 200 most of the times for long term. If you want to buy stock for long term, you can put the 150. And also short term, if you want to trade, we have what you call 13 EMA and 48. We show you that. And we show you how to put your resistance, your support. So resistance means whenever the stock go to the resistance, that's the time for you to sell. Support, that's the time for you to buy. We teach you that in the class, how to use, because if you don't know how to buy, when to buy, if you don't know your technical analysis, it's gonna be hard for you to know to buy. So take the class for very, very, very cheap price. So remember the MACD line, we have two lines. We have what you call two lines. We have the MACD line, which is the bullish, as I've been told you, and we have what you call the signal line, which is the bearish line. So whenever the blue line, which is the MACD line, cross over, so we have what you call a bullish. So the stock is up because the MACD line is up. So whenever the signal line, which is the bearish line, cross over the blue line, the stock market is going down. You see, they go together. See, start forming. Whenever it's cross, that's the time. Remember, whenever the bullish line cross over, which is the MACD line, it's time for you to buy because it's crossover. Whenever the bearish line, which is the signal line, cross over now, over the bullish line, it's time for you to sell. Simple. All right. So remember, stock market has only three things. It's been going up, down, up, down, up, down, up, down. And sometimes you do what you call a sideways. It doesn't go that too far, like this. Like, see, the stock market sometimes goes sideways. After a certain time of sideways, it might go, it has a chance to go, it has a chance to breaking up, going up, or it has a chance to break down, going down. So we teach you all those things in class. We teach you when that's going to happen, what to put, what to know, what to be know, what you have to watch before you even buy. Remember, whenever you buy in the stock market, you buy low and you sell high. You buy low, you buy low. So you buy low and you sell high at the top. We teach you that. But in order for you to know when to buy at the low price, you have to know your indicators. We call that indicator. When to use your indicator. Because your indicators is very important to use. Your technical, we call that the indicator for your technical analysis, your technical analysis. We call that the technical analysis. So we should, in that class, I've been teaching you all those technical analysis, when to put in for very, very cheap price. Just click on the link down there, you see? Because I got too many people already been registered. Because the price, if you click, you're gonna see the price. The price will be changed. Is that gonna stay like the same? It's gonna be very expensive after that, because I already got too many people taking this class. After that, I'm gonna have to raise the price. Now, take your chance now. You never know when that can be changed. Click on it. If you want to see, just click on the class. Just click on the link. You're gonna see the price. You're gonna be, I'm not gonna tell you, just click. And then you're gonna take, if you want to take it, you're gonna take it. If you don't want, you don't, because you're just gonna see how cheap this class is. Now, you see, you buy low and you sell high. Because that's the way you make money, guys. Some people just been working hard, doing other stuff, and leave their money in the bank. No, use your money, invest your money, take profit, because the bank don't give you money. Whenever you put your money in the bank, they don't give you money back. Matter of fact, your money, the bank invest your money. They don't have your money at the bank. That's why they do. They invest it for themselves. Why don't you do it yourself? Educate yourself, get training, and then you do it for yourself. So you see, you buy low and then you sell high. And then we call that period of time of sideways. We will call that sideways. I'm not gonna give you, see, I already give you a lot of things free here. So you better do yourself some favor, take this class, you see? You buy low and you sell high. And sometimes the stock, remember, stock has been doing three things. No matter that, it's going up and down and then sideways. But most of the time it goes up and down, and then there's a time it goes sideways. Whenever the stock is going sideways, that means it does not go nowhere. It's very dangerous when it goes sideways. If you don't know what you're doing, you can lose money by investing when you trade, because the money can be broke. But if you know what you're doing, if you know how to trade, if you educate yourself, that's good. That's why it's very cheap to take this class. So when the stock is doing three things, it's going up, down, and it's going sideways sometimes. Remember about MACD. So remember, and also after you take this class or before, if you haven't been investing in the stock market, I'm gonna put a link down there. The link is for a Webull down there. You're gonna click on that link. So they give you some free, Webull give you some free stock. And I'm gonna put another link also is Momo. So it's give you some free stock. So click on this. So they're gonna help you get some free stock. If you click on Momo on Webull, you're gonna get some free stock too, because that's a good platform. Now, Those are good platforms you can invest your money. So guys, that's all for today. I'm gonna come back again, give you some more training. Remember, if you need credit, you need help with your credit, we do that also. I help people fix their credit. In our class also, we will be offered this class very cheap also, so you can know how to fix your credit.